And welcome back to another great video. I hope you guys enjoyed yourselves over the long weekend and happy holidays. What is going on with the market today? Tesla stock is headed for its worst month, quarter, and year on record. These are some of the headlines for today. Just like Tesla, we also have NIO, the Chinese EV maker, cuts delivery guidance for fourth quarter, citing COVID disruptions. Why restaurant chains are investing in robots and what it means for workers. We're seeing a big wave of tech coming in with EV car makers and also infiltrating the restaurant markets. And lastly, we'll go over some technical analysis on the SPY to see what to expect for the last trading week of the year. So you want to make sure you stick around for my market outlook going into 2023. But before we get started, make sure to visit the channel, subscribe, like this video, and hit the notification bell. Tesla stock has dropped 8% and is on track to close out its worst month, quarter, and year on record. The latest drop in the stock comes after the Wall Street Journal reported that Tesla will continue a week-long production halt at the Shanghai facility due to a fresh outbreak of COVID-19 cases among its Chinese workforce. This is the same news that was coming out today for NIO. When the Shanghai plant reopens in January, it will do so for just 17 days, breaking from Tesla's established practices. The stock has fallen over 70% from its record high in November 2021 and is down 68% in 2022, roughly double the decline in the Nasdaq. Despite offering incentives in mainland China for December auto sales, the company's stock has fallen 43% this month, its worst month ever. In the fourth quarter, the stock is down 58%, worse than its 38% drop in the second quarter of this year, which has been its worst period on record. And furthermore, more than just the numbers that I've been reading and the declines in China, a lot of this has to do with Elon selling and siphoning that money for Twitter. So it's not only the numbers in China, it's Elon's decision making. He's a little bit over his head, and he's one of a kind, but he's making some pretty drastic decisions here that are not on his favor. But in the long term, this is just going to be noise. We're going to see, in my opinion, both Tesla and Twitter do very well. It's always the same story where he battles the downturns and he overcomes them the years after. This is nothing new. Tesla at one point was looking to sell to Apple and was about to go bankrupt. And look at it now. Chinese electric vehicle maker NIO has lowered its fourth quarter outlook to deliveries due to supply chain and disruption caused by COVID-19 outbreaks in major Chinese cities. The company now projects that it will deliver between 38,500 to 39,500 electric vehicles in the fourth quarter of 2022, down from its initial estimate of 43,000 to 48,000 vehicles. As a result of the disruptions, NIO customers have faced delivery delays and registration issues. Despite posting losses, NIO's third quarter was strong for production and sales, with a 33% increase in revenue from the previous year. The company recently launched two new electric SUV models, the EC7 and the ES8, which will start shipping in May and June. We're seeing the same EV news that we're getting from Tesla, the strict COVID lockdowns that we're seeing in China disrupting numerous industries in the Chinese market. Chipotle Mexican Grill is testing the use of a robot to make tortilla chips in stores, while Sweet Green plans to automate salad making in at least 2 locations, and Starbucks wants its coffee making equipment to reduce the workload for baristas. These automation announcements in the restaurant industry were made as operators search for solutions to a shrinking workforce and rising wages. However, experts say that it will be years before robots pay off for companies or replace workers in the industry, which is still largely labor intensive. Before the COVID-19 pandemic, restaurants were already struggling to attract and retain workers. The pandemic further exacerbated this issue as many laid off workers left for other jobs and did not return. Automation startups claim that robots can flip burgers and assemble pizzas more consistently than overworked employees, and that artificial intelligence can enable computers to take drive-through orders more accurately. We're seeing a momentum shift in the workforce, and a lot of jobs this won't happen anytime soon, maybe 5 to 10 years from now, are going to be replaced by automation. And the new jobs in the industry, I believe, will be tech heavy, where it will be more at home and office driven. Now let's take a look at the SPY. We're seeing a lot of talk about a potential Santa Claus rally. I don't think we're going to see that. We're not going to see any major movement. The market is dried up. Liquidity is dry. We're seeing a lot of complications. Interest rates continue to go up. And if we just look at the technical simply here, we're in a downtrend. Lower highs, lower lows. This is just like clockwork. And I do believe we make lower lows. I could be wrong, but I'm trading the option side of the market. This is why it's great to sell volatility, have a neutral position, and trade often, trade small. Do I think we're going to have a significant rally to the upside? Absolutely not. Where is this money going to come from? There is no news about money or liquidity coming into the markets by the Fed or by any major institution. There is no data there indicating that there's big money coming. So I don't think we're going to see a market rally. Now, we might see some momentum shift, and we're going to see the tone on the Fed coming the new year in January. But as of this week, I don't expect fireworks in either direction. I think this is a classic case of time decay and burning the calls and the puts. This is why I continue to sell during these market conditions. My prediction for the end of the week, which is a few more days, is we're not going to see any major moves. Coming into January, we need to see the tone of the institutions, of the Fed, and see what they have in store for us. Make sure to check out Patreon, links under the description of this video, to get my weekly trading signals. I do a lot of spreads, a lot of selling, and a lot of premium collecting of this market. Those of you who are buying, I am collecting your premium. That's going to do it for this one. Thank you very much, and I'll see you on the next video.